Greetings traders, this is Houston Trong from thetradingedge.org, and here is your weekly market outlook for Feb the 22nd to the 26th, 2021. And so we enter into the final trading week of February. I hope you're having a good February. Lots of opportunities in the markets, lots of actually risks as well. So we'll go through a regular review of our charts for the coming week, for the coming month. And I'll give you some things to think about as well. I'll show you some charts and some ideas to keep in the back of your mind. Now, we're still in the middle of earnings season, so for the coming week, for the next couple weeks actually, make sure you're referring to your earnings calendar to make sure you're not taking any overnight risk or earnings risk unnecessarily. As well, busy econ calendar for the coming week. Check that out. We've got Fed Chairman Powell speaking throughout the week, so folks will be listening in to see if they start instituting things like perhaps, the ideas have been thrown out there, perhaps yield curve control and the idea of perhaps even further loosening. You got Janet Yellen looking for a bigger stimulus package, so lots of stuff going on the macro front. We could certainly play into the broader market rally. First and foremost, let's not forget we are in a strong uptrend. So as we get into the charts here, again, just bears pointing out since since March of last year that since we bottomed in March, there's been really no point getting short the markets. Every single pullback has been a viable opportunity, and it continues to be that way. If you try to get cute and you try to call a top, it hasn't worked too well for you, right? So the point being, even when things look bleakest, we're still in this broad market rally, and some of the charts that I'll refer to today will basically point out that fact. The reality in the world we're working in is that the Fed is basically inflating assets, so you want to be holding both soft and hard assets. Now with commodities rallying as well, it's really hard not to be long things, right? You want to be long soft and hard commodities. You want to be long of assets and not long of cash, right? And this is why we have assets basically rallying, whether that's, like I said, commodities or stocks or cryptos. These are all assets. And for instance, cryptos, it's a crypto versus cash, right? So when you're talking about Bitcoin USD, you're holding Bitcoin and you're short cash. Guess what? It's done pretty well, right? You do not want to be holding cash right now because we are slowly creeping towards a possible negative interest rate environment, or where basically real interest rates are close to zero. So let's get to the charts now. Enough about the bigger topics. Jump to the charts and let the charts do the explaining. So let me close this down here. Jump right to our charts here now. And that's what I always do. I like to start with the VIX because it gives a pretty good picture of what's going on here. Volatility, when it's popped up, has been very short-lived. This is the monthly chart of the VIX, the VXX ETF, ETN specifically, and right now it's basically Momo down. Right, we've had small pops to the upside, and if you had the inclination to get long VIX, you've been wrong every single time. Right, you had that one pop here back in remember last year, going in when the Corona thing spiked things up. But since then, look at this. This is just a slow bleed down, and we've been calling this low here now as the possible low pivot to get taken out, this all-time low on this ETN here, 1315. Actually, not the all-time low, but multi-year low. 1315 is basically the low of this here. It's kind of hard to see, so I want to turn off my. I'm going to turn on the log chart so it makes it easier. It's an outside, inside, and down, right? And it's just slowly making its way through this range to come out that other end. That's ultimately what we were expected to do, is come out that end there. And you know what happens if VIX gets back down to 1315? That's a low volatility environment, and that just means you want to be long and not fighting this this volatility decay. So back to the monthly chart, VIX slowly going down. This is actually a Momo move down now on the monthly chart, but it's choppy, right? Because you're going right in the lows. Well, not exactly in the lows yet, but you're going to recent lows. We finally broke below that range that we've been pointing out for the past few months now. That 13, what was it again we talked about? The this low here, 1630 area. It finally got taken out. broke below there last week. We said we were watching like 2 weeks ago. I was like, okay, continue to watch this pattern here, the outside inside, because we know what happened on the quarterly chart. It's outside inside and down. How does this resolve the outside inside on the weekly? And it goes outside inside and down. Now intraday and intra-week, it is choppy, right? So this looks clean here because this is why we like the higher time frame charts. It's super clean. It's very clear what the trend is. It's down, right? Look, inside bar down, down, no higher high. But you go to a daily chart and that's a little trickier, right? Here's a daily chart of the VIX. Here's that 1630 area that we've been talking about. This, you know, that little highlighted zone here. I'm gonna draw it out a little further so you can see what that's done now. So let's draw it out to here now. We broke below there, and you can see it's choppy. You have an outside bar that goes up, up, then inside bar, they run out of steam here, break it down to the downside, inside bar down. Then a pop up on the outside bar up here, but then, you know, they can't follow through, so it's a Momo down to the to finish off the week. So basically, VIX going right into, you know, the multi-week lows here, and you can see that former area, as I've been pointing out, once it breaks below that area, will it turn into resistance? And it did. Look, so we saw here on the 17th. So that's the Monday. Sorry, that's Tuesday. It broke below here on Monday. Tuesday tried to retest. Hits now. And look at this. This 8-period moving average, this blue line, is actually starting to act as resistance as well. Tags are there, and here, and to the downside now. Now it's getting a little extended from the 8-period moving average. We'll be surprised to see this thing pop in here again and tag this 8-period to get back into you know, to basically stop anyone who gets too aggressively short. But once again, the trend remains to the downside. Very, very hard to be long VIX here when you're trading with full time frame alignment to the downside. There's your quarterly open, there's your monthly open, there is your weekly open. So most of the time you're spending it either, you know, slightly above but mostly below that weekly open. So it's going to be your red week for most folks watching that. So VIX continues to melt. Momo down on the 2-day chart. It's Momo down on the daily chart. So yeah, it's just Momo down now. And again, it can certainly get ahead of itself, right? It can get too extended and then it'll pop back up again. But that doesn't mean you get long it. It's basically just you're looking for a good place once again to get short the VIX, because, you know, if that's your only trading strategy, to short VIX, you've been doing pretty well since March, right? So if you just try to find every single opportunity to short this thing over time, you know, if you just keep staying short, I mean, more times than not, if you have a good methodology and you're not simply buying into lows or selling into lows, you probably made good money just simply showing the VIX. SPY, similar chart, but did not hit all-time highs yet. That's the question. Will SPY now hit those all-time highs? And SPY came close to it later in the week, but it did pull back a bit. So this is a continuation of this move here, the outside, inside, and up. We have 4 consecutive months now of higher highs. All right, 1, 2, 3, 4. Very difficult now. We have 1 trading week left. Right? Can the sellers turn this month red? That's what would be required to make this month a little bit dicey. It'd be very difficult, right? You have to come all the way back through this range again, and then break below the monthly open, and then to make it really scary, to break below that low there, which is the prior month's low. You create an outside bar. That would be very difficult because this bar is up 5.4% roughly. You'd have to come back through all the way here again to create a reversal to take out that low there. So unlikely. Once again, you know, this is why the monthly opens are so important, because it shows you the broader picture and who's in control. We haven't had a break of a prior month's low since this month here. That's September of 2020. But that quickly got negated when they went inside bar, and now you know how it plays out. It goes outside inside, right? Like this, for some people, looks scary. And you see that. Oh boy, big red month. Scary, right? Potentially scary. What we know about outside bars is that you need to have the follow through. If it does that, now it's basically stalemate. And it does that, it takes all that high, it's game on to the ups to the long side. And yeah, you know who's winning that game right now, the longs. So SPY closes the week basically, you know, small red week. Its option expiry this past Friday, so we basically got pinned at the 390 area, closed right there at 390.03. So very, very small bar there, not as small as the prior week's bar. The prior week's bar was very, very tight. So this week here, we're watching to see if it can take out this current week's low, and that would cause a weekly reversal. So it's Momo up right now on the weekly chart, but we still got that condition of higher highs. So if you want to see things begin to break down, you got to see this low get taken out first, this past week's low. So on the SPY side, anything interesting to talk about? It's just grinding higher. You have some things that are playing up very, very slowly here. Let's go back to the let's say the daily chart here. On Monday, right away, they put the sellers kind of took control because you had this situation here, right? Something I've highlighted many times, and it's just worth repeating if you're new to this idea, is that if markets gap up, you really need to, or gap down, you really need to pay attention to those things, because unlike cryptos, markets gap because they don't trade 24/7, and so when markets gap up, the buyers, the longs, are basically getting everything they want, right? So if you're long and the market gaps up on your long position, you're pretty happy about it. Now, if all of a sudden that gap fades, that doesn't feel so good anymore, right? Basically, you had what you wanted. If you didn't take profits, now it's coming back against you now, and now it's something that's a cause of concern, because what was once working in your favor has now evaporated, and now you have to make some decisions. And that's kind of what happened on Monday. Markets gapped up after this outside inside and up situation, and it looked like it was going to go higher, but they lost steam. So markets, again, the buyers had everything they wanted. They just couldn't hold the control, and then it pulls back in, creating your classic Scott Redler red dog reversal right there. And so that means sellers overwhelmed the buyers, just basically ran out of buyers, or the buyers didn't want to step up and defend. And now we have condition of not just a red dog reversal, but it's happening at the beginning of the week. So what's that mean? Well, that means unless the buyers can reclaim the high of Monday, you're going to have a red week, right? So immediately, once the the buyers fail to hold it there, you get a red week, unless somehow they can break back above that purple line. That's the difficulty there, is that as soon as it turns red on the weekly chart, anyone looking at that chart is going to see red, right? So you're going to have a red week, and it's going to be hard to change that around unless you see the buyers really, really step up. Monday, it fades into the prior bar's range, so you got that red dog reversal sell signal, and then you have a multi-day pullback, 2-day pullback into that 8th period EMEA, where it bounces a bit on Friday. But once again, you have another red dog reversal where it kind of gaps up, but again, the buyers are unable to hold it. Here you have mixed time frame alignment. So this is not, again, you're not trying to get aggressively short here, because it's still long on the, you're still green on the month and on the quarter. It just so happens the week is red. So this is just a mixed time frame alignment situation here, where intra-week, you have these mixed time frames, so you get this kind of choppy trading. It doesn't really go anywhere because it's a red week, but it's green on the month and the quarter. So that's what we see happening here at the SPY. Qs, kind of the same thing, but we did see some more pressure on the Qs. And so here now on the Qs, we still have this multi-week move to the upside, but we did break this Momo up move. So it had gone Momo up on the weekly charts, but this past week it did break below the prior week's low. Now we have an outside bar in the week. So just like we saw that with the SPY chart, is this outside bar significant? Hard to say, right? It's only significant if we have follow through. If it goes outside bar down, we know it's a Momo down situation, correct? So it's Momo down. We simply want to see at that point, how far does a Momo go down, and can they break below the prior month's lows? Prior month low is way down here. Difficult to do with only 1 week left. If it does outside inside, like we saw on the prior chart, it could just go outside inside, and then all of a sudden in March it goes outside inside and up, and then it's off to the races once again. Or you do some sort of combination or some a Momo down reversal situation like this one here, right back in September, where it goes outside bar like this. That looks scary, right? Perhaps. Maybe not. Well, look, here's another one right there. Here's a good example. It goes outside bar, and then it goes outside bar down. You think, whoa, what's Momo down now? Is this scary, isn't it? Not really in this case, because you still have the green month and the green quarter. So as soon as you take out that high there, it's a Momo down reversal back to the upside again, and now it turned to the inside week, and then once it broke above that, you know what happened there, right? It was a multi-week move to the upside, crushing anyone who got short. So that's what we're waiting for. We're waiting to see what's the next bar this coming week, knowing that it's still a green month and still a green quarter. So you cannot get aggressively short on this. You're waiting for this thing to, again, maybe just got a little too far extended, and people are happy to take some profits, and they might buy it back again on a dip. And we did get that dip this week. So back to the Qs here. We got that touch of the 20 period moving average, and we haven't had this since here Jan 29th. Actually, that's not true. Yeah, that was the last time we touched it. Here was the 29th, 30th. It did tap it originally back on 27th, and it popped a bit, but it went even further down to really test the metal of the buyers. We had that quick tag here of it here on the Thursday, popped up, again, but closed the week red, pins the 331 on the expiry of those options on Friday. So Q is slowly making the way to the upside. Still, again, the big thing to watch this week is that outside bar on the weekly chart. On which side of this range do we see this week? Does it trade above it? Does it trade below it? Or do you trade inside of it? And that's what we're going to be watching for in the with the recognition of the greater time frames are still pointing green to the upside, right? Green week, green quarter. Green month, green quarter. Let's go down real quickly here. Dow did hit intra week. It did hit all-time highs. So on Tuesday, that's Tuesday there. It did go outside bar up, and that was an all-time high on the Dow. There goes Momo down, but they closed it strong, and then it went Momo down reversal. Look at that. That weekly open right there, that purple line, intraday. There was a signal that was to go long. It hit that weekly open right on the dot, and then it faded back in again. This is basically that line there. Again, the rationale of why that's important. It just basically reinforces it how important these weekly opening levels are, and the monthly opens and the quarterly opens. It turns into a very, very strong level of resistance, and they tag it right to the T, and they pull back in, and it closes at basically 315, the strike price, to close out the option expiry Friday. So on the Dow side now, again, to see here now, if it takes out this low here, you want to see if it takes out that low there, because that's the prior week's low. Okay, if you take out the prior week's low, then you do break this. You do break the multi-week upswing. So that's what you want to watch for: is can it break below this past week's low? Otherwise, even if you get a reversal bar, it comes down here. If it doesn't take this prior week's low out, it could easily pop back up again and then finish this pattern of taking out that Tuesday high, and then we get back those all-time highs again. So the bias again to the upside. Russell, this guy has been gangbusters, the strongest of the indices by far, just based on how strong this chart is. And this is basically one thing to point out here, right? Like if you're wondering why is the Russell so strong, well, here's one reason. It's because it's Momo up. Momo up on what? On the yearly chart. Look at the 12-month chart. It's look at that. Look at the prior year, 2020. It was down here in the pits at one point. Remember, we were watching to see if they could take it that low there. It came very, very close. The bars bought it right back again on the outside, inside, and outside bar up. And now 2021 starts the year off with fireworks because it takes out the prior year's high. And that's Momo up now. That means people are rushing into the riskiest of the assets, the most speculative of the equities, and that's the small caps. So people are trying to gain exposure to the I guess the bottom of the barrel, and trying to find the riskiest of stocks with the hope that the high risk becomes high reward. So right now it's paying off, and this is why it's going gung ho into highs. So Russell looking very, very strong. We've had multi-month highs, 1, 2, 3, 4, 5 months of higher highs. This week we did break the Momo up sequence here, but it ends the week fairly strong. It was a red week, just like the other indices, but it closed in the upper half of that range. So going into the new week here, I'm watching to see if it can finish off this inside bar reversal back to the upside again. Goes inside bar down. Sellers, they get stopped out if you put your stop there when this thing popped up on Thursday, Friday to take out that pivot high. And now, if you can open up and wherever the week opens up, maybe around here, if you can trade above that weekly open, it's going to be full time from alignment once again to the upside, and they're going to go after that pivot and then perhaps back those all-time highs on the Russell. I'm going to skip TSX, man. Nothing really going on there. TSX just slowly grinding upwards. Emerging markets is interesting though. This one here has just been gangbusters, and boy, emerging markets have had a phenomenal run. I think a lot of people are saying that that China has been the biggest winner in this whole COVID story. Their economy is rocking. And now we also have Japan that's hitting decade long highs on the Nikkei. So now the EM here, the emerging markets ETF, is trading at those all-time highs. So very, very strong chart there on the emerging markets. It all started here, right? We've been very, very closely watching this pattern, the outside, inside, and up, and now we have 1, 2, 3 quarters of higher highs. So EM, no reason to believe once again that this thing doesn't just have another strong month. So right now it's a red week like we saw the other ones, but it's the same exact conditioning, and this is what happens when you open up high and you can't hold it, you're going to get that choppy trading. So ends up being another viable pullback. Now bonds, the story is bonds, right? The story is bonds. This is why so many things are rallying here. The Fed is basically tapering down any volatility on the bonds, and so we have bond prices finally pulling in here back to the levels that we had we're back in the March range again. And the bigger picture here is we have this big inside bar reversal short, right? That's playing out. This is probably going to come out this area here, that low right there, 134.45. Very likely we get back into there. Why? Inside bar up, inside bar up, right? It's an inside bar reversal there, and once that starts, it's come back through the range to take out that pivot low there, 134.45. Watch for that, and it's slowly working its way down there. Again, doesn't go in one straight line. The markets rarely ever do. There's a lot of back and forth, but that's ultimately the destination. I think that's very, very likely. It's inside month and down now. That's down. It's double red month in a row to the downside. Inside bar reversal on the weekly chart, right? Inside bar up. Look, hits that EMEA. It's trending to the downside. That's a strong trend on the weekly chart, right? It's slowly making its way down. This week it actually gapped down and kept going. And on the daily, again, the dailies are trickier. And of course, intraday is even trickier. But if you look back, you take that step back, right? You take that step back and you see the broader trend. This thing, even though you have pops up, you don't want to get overly influenced by intraday or intra-week movements and lose that proverbial forest through the trees. So that little intra-week move up on Tuesday was just faded on Wednesday, Thursday, and Friday, and we're at multi-week lows there on TLT. Expect more of the same here now as it continues to melt to the downside on TLT. Two more things. Let's talk about physical gold, MGC. MGC did a bit this week to fool a lot of people, but the trend is down, and it finally broke that 3-month trend. Which has been playing out for a long time, and it finally broke it. So this scenario here, since April of 2019, finally got extinguished. So it was a Momo up situation here that ran for 1, 2, 3, 4, 5 consecutive quarters, right? So we had a Momo up situation here that ran for a long time, ran steam right there, okay? Inside quarter, basically just ground, just consolidated, and now finally have this here where that low is lower than that low. So it went inside bar down. So this Momo up situation has now been extinguished on the gold chart, and they have a lot of work to do to basically repair that. There's actually, this gold chart now is slightly damaged. And a lot less bullish than it was before, because if you look at this sequence now, that's chop city. All right, you don't want to be trading in that when there's so much nicer stuff to be trading. When you get this kind of stuff, you're gonna get chopped up. And you could certainly there's ways to trade this on these lower time frames, but compare that with the next chart I'll show you. This is tricky stuff, because even though the bias is now to the downside, because you're trading, look, below the quarterly open, below the month is red, you're trading below the monthly open. This gold still has these proverbial pops that happen that if you're smart, you're selling into at this point. So here's the weekly chart. It goes inside week and down, right? That's clear. Inside week and down. So we draw that, right? So ever since we had that Momo up reversal short, right? Went Momo up, failed to go any further. It's a short there. It goes inside week for a whole week, does nothing, and it breaks down this week. It takes out the 3-month low. That causes the inside quarter and down this past week. So the trend is definitely onto the downside now on gold. We got full time from alignment to the downside, and gold has a lot of work to do if it wants to change that. So now on the daily chart, you get these small pops that are getting faded now, and you kind of pop up, right? It doesn't trades higher intra-session, but then ends up fading and end up looks just like a doji mostly on these green days. So outside bar on gold there now easily pop back up again, but expect this thing to get faded as you start hitting these monthly levels, and you still, again, like I said, red quarter, red month, red week if you can stay below wherever it opens up in the week. So pay attention to that. Again, if you open lower and trades up, then you got that weekly multi-week, that mixed time frame alignment between the weekly and the other higher time frame charts. So that's the scenario you guys watch out for. But again, if you trade below all those time frames, yeah, that's full time frame alignment. No reason to be long gold. So the question is, are people migrating? And this is beginning to gain consensus. Is, are people beginning to migrate and move their exposure from gold into something like Bitcoin? So Bitcoin has done a really good job now at making the case that it could be digital gold, and it's very hard to argue with this chart. And proponents can argue either way, whether Bitcoin has any value or not. But certainly it's hard to argue against the trend here now. And now the trend may be getting ahead of itself, but some of these things become self-fulfilling prophecies. If there's enough people layering into the trade, things can go a lot further than what you think it can. And at that point, it's no point trying to rationalize it. If the trend's higher, you only have two options: trade it, you don't trade it, right? If you trade it, just be prepared for steep pullbacks, because if these things, these runaway trades can oftentimes, even if they're heading higher, can pull back very aggressively. And if you don't trade it, then don't feel bad about it, right? If you miss the trade completely, then so be it. That's just not your game. Just don't shit on people who are on that train. If you choose not to participate. So it's a choice. That's the bottom line, is that it's a choice to participate or not participate, and either choice is okay, with the recognition that there's risks either way. So obviously the risk of not participating is that you miss the upside, and you might feel really crappy about it, as people are bragging about catching Bitcoin going from whatever 56,000, what's it trading at now, close to 57,000, and it goes to 100,000. It's going to be hard to sit on the sideline, as that's the number that's being bandied about now is Bitcoin or 100,000, perhaps Ethereum 3,000 plus. So let's see what that happens there. But Bitcoin, all I can really do is show this chart we show every single month. We're inside year and up, double inside year, and now 2 years of up movements in a row now. 1 year up, 2 year up. So this thing can go a lot further, and this is all blue sky here now. So there is no prognosticating, there is no prediction that's gonna nail it here. It just becomes a question of how far does the momentum take things, as this thing is going gangbusters to the upside. Congratulations once again to all the crypto holders out there. I've been personally long for a long time on cryptos. I've been talking cryptos for a long time, so yeah, I've had a nice run up on all my crypto holdings. So congrats to everyone else who's been able to hold through some of the volatility. And again, great market to trade, especially since especially if you know the trend is up. The trend is up. That your job, just like on the equities market, is just to find buyable pullbacks. Okay, so that's your monthly chart on Bitcoin. Ethereum, basically the same chart, a little bit, basically the same kind of chart. If there's some very, very clean signals here. I took one. I've taken plenty of trades in Ethereum, but I think the last big one was here, outside month and inside month to the upside. All right, that never looked back. So this is way back in October. Look at that move. So that's a monthly chart. Okay, so that's a 4/21/29, and now it's trading at 1975. It cracked 2,000 today. Once again, congrats to those Ethereum holders or hodlers. And there you go. Cryptos are on a run. I'll show two final charts here now. Total. So that's basically the overall crypto market. If you were to aggregate it, once again, Bitcoin still represents about 60% of that market. Maybe Ethereum is about 30%. The rest of these altcoins are shit coins. But this thing is trading with a lot of strength. So on that monthly chart, here we go. Inside year and up on the total chart. Okay, some really, really clean signals here on that weekly chart that we pointed out a few weeks back. And then one final chart I'll show you today, which I think is kind of funny. I've shown this one a while back, but there's a contract that trades on FTX, which is an exchange called a SHITPERP, SHITPERP. It's basically a perpetual futures contract that tracks a bunch of shit coins, a bunch of altcoins. And just to show you how bullish things are, right, people are piling into these altcoins very, very heavily. We've got a Momo up situation going on these shit coins or these altcoins. So this is a basket of about 100 of the smallest cap coins, and you can see the rally is broad on these cryptos. Not only is it just in the big the big Bitcoin contract or the or coin and the Ethereum coin, but it's broad. It's across all these coins, and you see shit perp now going Momo up on the monthly, and this thing man, from here it's doubled, right? It was at 14, more than that, sir, excuse me, it's nearly tripled. It's at 14,400 here back in December, now trading at 46.64. So this thing, who knows how far it runs at this point here. You're trading full Momo to the upside because you're doing a Bollinger Band walk on the weekly chart. And what we know about these Bollinger Band walks, when you start doing these on the weather time frame, they just have to keep going. What you don't want to see is you do want to see a low get taken out here, because that could lead to a deeper pullback. And if you get full time from alignment, that can lead to even deeper pullbacks like we had back in 2017. So I'll give you an example here where you have back in 2017, this is that's not 2017, this is 2020. So when I can see 2017 here, that's 2019. So here we go. So there's your 2017 chart, right? So there it goes, Momo, inside, outside, inside, and up, pops up here, does the Bollinger Band walk, has to keep going, it doesn't right there. See, inside bar and down, and that breaks the Bollinger Band walk when the low gets violated, and it breaks the time from alignment. This is your quarterly open and your monthly open. That's January. This is not a coincidence that this happens. This is a January, so brand new quarter, brand new month, and when this low gets taken out, it goes inside week and down. That's full time from alignment to the downside, and it's gone, right? Sayonara, crypto market at that point. It goes from a high of 700, plus this area here. It's just 664. This is all market cap, by the way. Okay, so 664 billion market cap, and then it shrinks down to, at its lows here now, in the depths of crypto land, went down to a $89 billion market, right? So you lost a lot of market cap there, going from the high was 761 billion in market cap, and then it went all the way down to 700. What's the low here? 91 billion roughly. Okay, so that's a very, very steep pullback, and it happens right there. So I can't wait till the next bear market happens, because as much fun as it was and us trading the crypto markets back in 2017, as much fun as this run up was, this run down was even funner, because it was very aggressive and it was very easy to make money, because most people are, unfortunately, they're not very adept at shorting. So it makes some easy marks for skillful shorters. So now back to our current chart. How far does that run? Okay, maybe we who knows? But to get that full time from alignment, you got to be down here. Got to break down below there and down below there, which is why I think the rally still has some time to go, because you're still going to lure in more people because they still have a green month and they still have green quarters. So can we have maybe it's Q2 of 2021 when you get a new open here in March, which is again end of March, excuse me, in April. When it's over here somewhere, that's a time to really begin to pay attention. Until then, we may have I'm not saying it won't be pullbacks, but those will be less dangerous for bigger reversals. When you have a monthly, quarterly reversal, those can become quite. That's when things are very precarious, which is what you need to watch for. All right, well, that's a wrap for me this week. Once again, I appreciate all the comments on YouTube and the trading blog. Happy to be back and sharing some content. If anything is there anything you want me to speak about or discuss, feel free to leave that in the comment section on the blog or the YouTube page. And as always, I wish you a good trading, trade well, and trade safe. All the best. We'll talk to you again in a couple weeks.